Well, we've got a very quiet economic calendar for the week ahead. It doesn't necessarily mean that it's going to be a quiet week. Of course, we've got the possibility of a flare up in Iran. We have got the likes of the CPI coming out of Australia in a, by and large, relatively quiet economic calendar. But then we've got some pretty interesting earnings coming out at a time where we've seen a focus on the tech sector. We have, of course, the big hitter that is Nvidia, alongside a couple of interesting software names that have been hit hard of late. So as ever, we're going to take a look first and foremost at the economic calendar's big hitters, and doesn't look necessarily too interesting, right? So I'm filtering it on trading economics according to the big ticket items, and you can see here IFO business climate out of Germany. We've got the consumer confidence number coming out of Germany on Wednesday. Then we've got inflation data out of Germany and France, some GDP out of Canada, and then US PPI. Yeah, it's not a massive one. And interestingly enough, I've only picked one out for this week, and it's not actually on that list. So they haven't got it down as one of their top tier items, but I think it's probably more likely to move markets than some of these other ones. So we can kick off with that. And that is focused on Australia. The reason for that is the fact that the Australians are in a position where they're hiking rates once again and have a more hawkish look than some of the other central banks around the world. That means that if we see a continuation of the upside seen for Australian inflation, then you have the possibility of additional hikes coming into play. Now, we can see here that at 3.8, it's very elevated in terms of the year-on-year figure. The 1% monthly metric for January expected to come down pretty sharply. I mean, can't see that every single time, but this time around expected a 0.2% drop in the year-on-year figure to 3.6. It's still very elevated. It's unlikely to really shift the narrative in a meaningful manner in terms of the RBA feeling like they've pretty much done everything they need to do. This is the latest sort of breakdown in terms of data from the Australian Bureau of Statistics. Bear in mind, they've only more recently shifted from a quarterly monthly report onto a quarterly inflation report onto a monthly inflation report. And so we don't really have a huge amount of data, certainly on that year-on-year metric that we have along the top. But nonetheless, we already know that's 3.8%. We saw the 1% figure last time around. It come off the back of two pretty much flat monthly readings. So there's an element of normalization, but certainly you can see it's a very sort of streaky metric. This, you know, sometimes you get nothing, sometimes you get 1%, sometimes you get more than that, as you see with July 2025. But certainly if we see this coming in hot, it provides the basis for possibly further upside in terms of the Australian dollar. So certainly one to keep an eye out for. And the reason is this: you can see market expectations point towards additional hikes coming into place. So a rate hike now being priced in as the base case scenario for May. And beyond that, there's a possibility we see another one. This actually looks very similar to what markets are expecting for US easing, which is essentially one hike, pretty much a given. In the US, one cut, pretty much a given. And then another one is, you know, a possibility at the back end of the year. So very similar from that perspective. Now, in terms of the market to watch here, one that I often cover when we're talking about the Australian dollar is the Aussie against the New Zealand dollar. And that relationship has been very consistent of late. You can see here this big bottoming out that we've seen here, and the Aussie absolutely blasting higher. And the most recent RBNZ rate decision, in actual fact, provided the basis for more of the same, because we had, or markets had been looking for the RBNZ to follow suit. They have inflation issues of their own. And so there was a view that the RBNZ would essentially follow their neighbors and start to hike, or at least lay out the groundwork for them to do so. Well, they didn't do that. They essentially left things open in terms of either directions, and they didn't necessarily sort of start to prepare us for a hike around the corner. And so we're just left with the Australians that are potentially going to tighten further. So with the fact that we've broken up through this major resistance level here at 1147, it provides the basis for plenty of upside to come from here, particularly if we see hot inflation coming out of Australia. And so that's why I think this is going to be a really interesting one for the week ahead, because the Australians are really out on their own in terms of the degree to which they could be hiking rates. The central banks aren't really too keen on that, but the Australians seem happy enough to be tightening. It's just them and the Japanese, except the Japanese are coming off the base of pretty much nothing, whereas the Australians already have decent levels in terms of interest rates in the first place. So you can see here we pull back into a relatively sort of mid to deep retracement. We rally. We've now seen a relatively shallow retracement, pushed up through that prior high. So for my in my mind, essentially, it's just a case of really trying to follow that trend as it sort of develops and shifts ever higher. I expect to see further upside to come from here, but certainly, like I said, really it's going to be guided as well by the data. And so it's worthwhile really keeping a close eye out on what happens in terms of Australian inflation. Now, let's just jump into the story around Iran. This, by and large, is probably the thing that should be the leading story here. And the reason for that is because something might happen over the course of the weekend. So before the week even begins, we don't necessarily know. Ultimately, it's a question mark on whether we're going to see the US launch attacks on Iran. I'm no military expert, but there's some pretty big ships that have been heading in that direction. And it's not just that. They've got a huge amount of warplanes. They've got refilling planes, I guess you call it. Yeah, I mean, there's a huge amount. I saw a number somewhere. Yeah, we can get onto that in a sec. In any case, they're essentially, it's not necessarily a case of, oh, we've just got one ship there and it's there to force the hands of the Iranians, which certainly a skeptic like myself would probably say Trump doesn't really want to get involved. He's just happy to take the win and he's just going to move a ship over there and then they'll sort of bow to his demands. He's certainly giving them the opportunity, and with this latest sort of board of peace speech and gathering, he has sort of stated, he wants the Iranians to come on side. But realistically, even if they found some sort of agreement, I don't necessarily think that they're going to stick to it. I don't think either side trusts each other. And so there's a strong possibility of a conflict. Now, if we cast our mind back, it wasn't so long ago that Iran was struck, and it was sort of very quick and it was over, right? And then it was like, right, well, don't retaliate. And suddenly it was a bit of a story in the past. So sometimes when you talk about market movements, it's the anticipation of it that drives markets. Once it actually happens, then you're like, oh, okay, fine, that's done now. And it didn't turn into anything else. And therefore things kind of can calm down. The difference here, I guess, would be, number one, there's a lot of stories about how they're gearing up for potentially a prolonged conflict, right? If this lasts a week or something like that, then again, you have wider implications. And then on this occasion, you're talking about the possibility of overthrowing the people that are in power. That possibly leaves a vacuum in the region and certainly completely shifts the narrative around exactly what's happening in terms of oil supplies. Now, the Straits of Hormuz is the interesting point in play here alongside Iranian output. The Straits of Hormuz, which I think is the next slide, we can see here 30% of global seaborne oil trade passes through that small gap between the UAE and Iran. 20% of global LNG. Some of it can get rerouted on land from UAE through, say, Oman, Saudi, places like that. But by and large, they have tried to mitigate relying on it too much, but there is a huge amount of ships that should pass through there. We've already seen the Iranians saying that they're about to shut the Straits of Hormuz for military exercises, notably with the Chinese. And so from that perspective, you have the possibility of short disruptions in terms of oil supplies around the world. Of course, what's the implication? Well, higher oil prices, and we've seen exactly that. Alongside that, you have question marks around production for Iran. This is a piece of research from Rystad Energy, and you can see here in terms of, this is towards the back end of last year, so a month and a half ago, or 2 months. So you can see where production is currently. You could see where they expect current capacity would be if they were to ramp up production. And then you can see where they think that essentially output would go if there was a regime change, which is a significant drop off from where we are at the moment, potentially over 1 million barrels per day difference. Now, you could say that that would be tightening in terms of global oil supplies, pushing prices higher. You could also say OPEC members would probably just pick up the slack and it wouldn't necessarily make as much of a difference. The argument behind that is somewhat flawed because many of the OPEC members are struggling to really fill their quotas as it is. So really it's going to come down to the likes of maybe Saudi to step in. But certainly there would be implications in terms of the oil markets. One thing I wanted to show you guys was this website that I found. Let's jump onto it here, which is called iranmonitor.org. And it is a live updating web page that you have a whole host of information coming down in terms of notable tweets from some of the key people that have their ear to the ground and different news publications. You've got latest sort of top tier headlines. So this is probably a really good place in terms of trying to gauge exactly what's happening right now. And certainly, right now it's interesting because it can give you some summaries. It can tell you exactly what the state of play is, some of the recent comments from both sides. But if we do get into a conflict, this is going to become even more useful, I would say, because again, it's going to be a good resource to be able to look at and try and see exactly what changes. Because quite frankly, you've got enough to deal with as it is without also tracking a live war. It's a busy business being a trader, and certainly you have to try and keep abreast of a lot of different events, and certainly this is just one of them. And the market movements we've been seeing in terms of the likes of gold, in terms of the likes of oil, have been playing into that. So if we look at the likes of oil, if we look at oil, we can see that essentially we are in a position where we're seeing the highest price for US crude since the beginning of August. So we've broken through resistance, clearly bottomed out around 66.5. We were previously at 55s. So we've seen a significant rally and run up in terms of oil prices. If you look at this from a long-term perspective, you could say, well, this is just part of this wider channel. You've got the possibility that we do see this sort of running into resistance before too long. That is a possibility. But the caveat here is that on the bottom end of that move, we also have sort of flatlining lows. So we're not necessarily trending downwards in the same way on the bottom end as we were previously. In actual fact, we sort of came 2/3 of the way into that channel, found that same low, and now started to turn higher. So certainly if we start to break up through resistance, then things start to take much more bullish outlook. And so a war in the Middle East that lasts over a week and potentially has Iran striking US positions, potentially striking US aircraft carriers, that's the kind of thing that could really see this market push sharply higher. So oil could be the big story for the week ahead. And we've broken up through resistance leading into the weekend. And bear in mind, when we see action like this, attacks like this, generally they like to do it on the weekend. They don't like to do it in the middle of the week, in my mind, because of markets, because of the volatility that take place. And then the weekend essentially gives you a window to try and operate and then provide markets with a little bit more of a calming take to say, don't worry too much. But certainly if it happens, then you're likely to see pretty major volatility. And you would think that would come in the form of significant upside in terms of oil prices. So you can see here this sort of chop that we saw here, and we've finally sort of pushed higher. And that, in my mind, is owing to the increased expectation that we could see something on the Iran front. And finally, I wanted to touch on what's happening in terms of earnings season. We've got a relatively busy week ahead. I mean, most of earnings season's done, quite frankly. And what's interesting here is that the volatility we've been seeing in terms of equity markets hasn't necessarily been associated with earnings, right? A lot of it has been associated with fears of what AI could do to the software sector segment. So we've got software that's been hit hard because people are wondering whether these companies are even going to survive, or their margins are going to be slashed, or their demand drops off heavily. Then we've got the big ticket AI story anyway, where it's the high capex. Is it justified? You name it. So the week ahead has a number of interesting stocks within that narrative. The biggest of all, of course, will be on Wednesday with Nvidia. And Nvidia actually has been, I don't want to say immune, but it has held up very well during a period of jitters for some of these other stocks. Most notably, if you're looking in the Mag 7, like some Microsoft coming off pretty heavily, whereas Nvidia holding up very well. However, the same cannot be said for the likes of Salesforce and the likes of Workday, both software providers that have seen many people raising question marks around exactly what a future will look like for them. Certainly, it's notable that for Salesforce in particular, they have been trying to get at the forefront of this move into AI, of this move into a sort of agent-led model. But nonetheless, there's still many people that think they're going to lose a significant amount of business because of it. So I just wanted to sort of look at the charts for these stocks really, rather than showing you the numbers. We've got the numbers here in terms of market expectations on both earnings and revenue. But let's just quickly jump through the charts and see exactly how these stocks are shaping up after recent moves. First and foremost, this is the chart for Nvidia. Long term, we can see that ultimately this chart has taken off, as we've seen through this essentially AI-led boom. Now, what's notable really here is that we've seen consolidation during a period of weakness for the Mag 7. Like I said, if you go Microsoft and overlay it, it's a very different story. Now, not all of them have suffered to the same degree as Microsoft, but certainly Nvidia holding up very well. And in part, that's because earnings season has essentially outlined the fact that these companies are going to be spending ever more money on this CapEx spending. So plenty more income for Nvidia to come. We're quite accustomed to outperformance, and you can see it down here in terms of the green E showing earnings outperformance. Let's get rid of the dividends. So earnings coming up, we keep seeing them outperform expectations. That isn't everything. Certainly the outlook will be absolutely key. But certainly I'm quite used to seeing them outperform. The day that they don't outperform, you're likely to see them getting hit hard. But they've held up very well. And we're actually coming into a period of time where people, I think, are trying to buy the dip in some of these stocks. So I think if we see a sort of rally for the tech names after people have sort of been moving into some of the more defensive stocks instead, then maybe it's a possibility that we start to see Nvidia breaking out from this range, which is 169 up to 193. So I've moved through 193 points towards the possibility of a move back up into new highs of 212 and above. In terms of Salesforce, you can see here, hit hard to say the least. It's been a pretty dramatic decline. That big head and shoulders formation with that neckline down around here, giving way to a pretty troublesome period for shareholders. Now, bear in mind, we've also got these vertical lines, which I'm just trying to highlight exactly how previous sort of earnings have shaken out. So we saw sort of earnings outperformance. We've seen some gains here, but for much of these other times, you've seen earnings strength, but the stock dropping. Now, the caveat I would say here is that the weakness we're seeing in the stock market isn't necessarily down to current earnings. And for these companies, you essentially are going to have to look a little bit further out. They might ultimately lose out to AI, but it's not going to happen the moment that everyone realizes that they have a possibility of that in the future. People are front running that move. Maybe they're overplaying it. But I think if we see weakness in terms of the numbers, it provides additional weakness to the share price. If we see strong numbers, I don't necessarily think that people are going to abandon their idea that AI could cause demand destruction for them down the line. So I think there's a greater degree of trepidation that would lead this towards a downside if we do see underperformance coming into play. Towards the upside, if we do see strength, you just got to try and watch out for this sort of near-term intraday trend. If we start to break up through the 193s, 199s, then maybe we start to see the dip buyers coming into play. And Workday is a similar kind of story, another software stock, and you can see coming into a really major area of support, 128, the lows that we had here in 2022. This stock has absolutely collapsed. In terms of the share price, again, you can see this is a company that even at times where we see earnings outperformance, a lot of the time we see the stock ultimately roll over very soon after that. Even if you have a good week, then it just rolls over. So it's had a tough time leading into this anyway, and now people really ramping up that selling pressure as we head towards that 128. Certainly if we break that level, things start to look particularly troublesome. But the dip buyers are going to come in at some point. Quite who they're going to come in for remains to be seen. But I wouldn't be caught catching a knife on this occasion. And certainly, like I said, where you have earnings coming out, the negative earnings are likely to be enhanced. The positive earnings can quite easily be overshadowed by fears that have been in play of late. That's it for today. I hope you enjoyed the video and found it useful. Make sure to like, subscribe, follow, all that good stuff. Aside from that, like I said, things could really kick off over the course of the weekend in terms of the Iran issue. So whilst the economic calendar is a quiet one, there's still plenty going on within financial markets. Thanks a lot, guys. My name is Josh Mahony, Chief Market Analyst at Scope Markets. Have a good day and a good week ahead.